Hey everyone, welcome back to Corporate Decoder, the place where we take big wordy corporate documents and tell you what juicy bits are hidden inside them. Today we're diving into a report from customers Bancorp Incorporated QB, and let's just say they've been busy making some interesting financial moves. Before we jump in, if you like getting simple straight talk on company filings, hit that subscribe button and join our Discord community linked in the description below. We dive into these things all the time and your insights are always welcome. So what we're looking at here is a current report filed by customers Bancorp. It's kind of like a special announcement to let everyone know about important events happening outside of their regular quarterly reports. Think of it as a company shouting out something significant is going on right now. And the earliest event they are reporting happened on the 15th of December 2025. That is our starting point for understanding what is new with QB. Scroll Customers Bancorp Inc. Pennsylvania 001 negative 35,542.27 to 2,290,659 per scroll. This filing is from Customers Bancorp Incorporated, that is the main company, and they are incorporated in Pennsylvania. We have their commission file number and their IRS employer identification number, which are more for official tracking and not super crucial for our story today. Scroll voting common stock, par value $1 per S-Hair QB New York Stock Exchange. Scroll. Now let's talk about what is traded on the stock market. QB has its common stock listed on the New York Stock Exchange. This is what most people think of when they talk about buying shares in the company. It's the regular voting stock. Scroll fixed to floating rate, non-cumulative perpetual preferred stock. Series F par value $1. Per-Hair QB BEF New York Stock Exchange scroll. They also have a special type of stock called preferred stock, though this one is a bit complex. It's a fixed to floating rate non-cumulative perpetual preferred stock Series F. Think of preferred stock as being a bit like a bond and a bit like common stock. Usually it pays a fixed dividend, but this one can change based on market rates. It has a par value of $1 per S-Hair and also trades on the New York Stock Exchange under the symbol QB/P. F-Scroll 5.375% subordinated notes due 2034 Cub New York Street OC Exchange is scroll. And then we have their debt away the company borrows money. They've got these 5.375% subordinated notes due in 2034. Subordinated means that if the company runs into serious trouble, bondholders get paid back after other types of debt holders. These are traded under the ticker CUB, also on the New York Stock Exchange. Scrollatum 1.01 entry into a material definitive agreement. Scroll, the main event here is under item 1.01, which signals they've entered into a significant agreement. This is where the real action is in this report. So on the 15th of December 2025, Customers Bancorp, along with their banking subsidiary Customers Bank, completed a big deal. They sold $100 million worth of new debt. These are 6.875% fixed to floating rate subordinated notes that are due in 2036. Essentially, they borrowed a large sum of money at a specific interest rate that will likely change over time. They did this through an underwriting agreement, which means they worked with investment banks, likely Keefe Bruyette Woods, Piper Sandler, and Raymond James to sell these notes to investors. And good news for the company: investors bought these notes at their full face value, meaning they raised the entire $100 million. After paying fees and expenses to the underwriters, the company expects to have about $98 million in actual cash from this sale. So they brought in $100 million, but about $2 million went to the bankers for their services. Now, what are they going to do with nearly $98 million? Well, it's for general corporate purposes, but they've given us some interesting hints. One thing they are considering is paying back some of their older debt. Specifically, they might use some of these new funds to pay off some of their 6.125% subordinated notes due in 2029 on the 26th of March 2026. This is a smart move if the new interest rate of 6.875% is higher than what they pay on the old notes. It means they are refinancing at a higher cost, but it might be for strategic reasons or to simplify their debt structure. They also plan to use the money for working capital, which is basically the cash they need for day-to-day operations. They'll also fund their own growth within the bank that is called organic growth, meaning growing from within, not by buying other companies. They might also pay off other debts, redeem preferred stock when it becomes possible, and even buy back their own common stock, which can boost the stock price. And critically, they are keeping their options open for acquisitions, meaning they might buy other financial service companies. So this $98 million is like a war chest for future business activities. This whole deal was made possible because they had filed a shelf registration statement earlier on the 3rd of September 2025. Think of a shelf registration like getting permission in advance to sell a certain amount of securities over time without having to file a whole new document every time. It makes it quicker to raise money when needed. As part of this agreement, they made promises and commitments about the company, the bank, and all the documents related to this note offering. This is standard practice to assure the underwriters that everything is on the up and up. And importantly, they've agreed to protect the underwriters from certain legal problems that might come up related to this sale, especially anything related to the Securities Act of 1933. That is a big responsibility for the company. A crucial point for investors to understand is that these notes are not like bank deposits. They are not insured by the FDIC, meaning if something goes wrong, investors could lose their money. This is investment risk. Scrollatum 9.01 Financial Statements and Exhibits. Scroll finally under item 9.01, we see the exhibits filed with this report. Scroll 1.1 Underwriting Agreement, dated the 15th of December 2025, by and between Customers Bancorp, Inc., Customers Bank and Keefe, Briette Sui Amp Woods, Inc., Piper Sandler Sooty Amp Company, and Raymond James Sooty Amp Associates, Inc. Scroll the main exhibit here is the underwriting agreement itself. This is the actual contract detailing the terms of how they sold those $100 million in notes with the underwriters. So what does this all mean for Customers Bancorp? Well, they've successfully raised a significant amount of capital through debt. They're using this money strategically, looking to manage their existing debt, potentially refinance some of it possibly at a higher rate, which is an interesting choice, and preparing for future growth through organic means or even acquisitions. It shows they are actively managing their financial structure and looking for opportunities. The fact that they are considering paying back older debt could signal a shift in their borrowing cost strategy or a desire to simplify their financial obligations. However, the key takeaway for investors is always to remember the risk associated with these types of debt instruments, especially when they are not insured. The company is clearly aiming for expansion and financial flexibility, but the success of these strategies will depend on market conditions and their execution. It will be interesting to watch if they use this cash for acquisitions. The financial services landscape can be very dynamic. Alright, that is our breakdown of Customers Bancorp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.